Welcome to our channel where we show you the best scalping strategy. Now many traders are coming to us and asking about scalping. Many of them are already interested in trading, but they want to know if the concept of scalping is for them. If you need more videos, please hit the like button, subscribe, and turn on the notification bell, and share this video with your Twitter, Facebook. We thank you for the support. Before we get into video, let me do a quick review. Price action is relatively consistent across different assets, so the video can be used for forex trading, stock trading, and crypto. In this video, we're going to tell you one of the best scalping strategies we have ever seen. Scalpers try to profit from small market movements by taking advantage of constant market activity. Scalpers can address the challenges of this era with 3 technical indicators suited to short-term opportunities. Scalping strategies are most effective when a strong trend or heavily range-bound stocks control the daily band. It doesn't work well in times of conflict or turbulence. What is crypto trading scalping? Crypto trading is a highly volatile and often unpredictable market. This can make it difficult to make money in the short term by buying and holding onto the coins. One way to trade the market is through scalping, where traders take small positions in a coin with the goal of making quick gains and exiting before they lose money. Which cryptocurrency is best for scalping? How much risk should you take when scalping? Is scalping better than day trading? The cryptocurrency market is a fast-paced, ever-changing arena. Day traders can make quick profits, but scalpers can make huge profits with little risk. Scalping is a trading strategy that allows investors to buy low and sell high. This strategy requires extensive knowledge of market trends and technical indicators because it is difficult to know when a trend will reverse or spot an opportunity without the proper knowledge. What is speculative trading or swing trading the most profitable? Traders who practice a form of speculative trading or swing trading are known as day traders. These traders take positions in shares, futures, options, and other securities for a day or a few days at a time with the hopes of making money quickly. They buy low and sell high by purchasing securities for which they believe will increase in value before moving on to another investment. Next, we go over the 4 best scalping trading strategies for forex and crypto. Scalping is a trading style that specializes in using small price changes and making quick profits. In day-to-day trading, scalping is a term for a strategy that prioritizes small profits. Scalping requires a tough exit strategy from a trader because a large loss can destroy many of the small profits that the trader is looking for. Therefore, for the success of this strategy, having the right tools. Forex scalping is a short-term trading strategy that seeks to take advantage of small price movements in the forex market. Scalpers will buy and sell a foreign currency pair, only holding the position for a period of a few seconds or minutes. They then repeat this process throughout the day to gain frequent returns by taking advantage of price fluctuations. In the forex market, another name for the smallest price movement a currency can make is a pip, percentage and point, which traders use to measure profits and losses. Forex scalpers usually aim to scalp between 5 to 10 pips from each position, aiming to make a more significant profit by the end of the day. Forex scalping is a form of arbitrage trading. What is scalping? Investing in a foreign currency is designed to take advantage of low exchange rates and allow you to make more money. The benefits will be realized once the market is profitable. All kinds of businesses need discipline, but because the number of jobs is so large and the benefits of self-employment are low, brokers must follow their approach to the market closely and avoid the huge disadvantages that can lead to many successful businesses. Brokers make a lot of money cashing in when they spawn and do not look for a winner. The goal is to be a good company with a lot of wins, not a handful of successful companies with big success. Speculations are based on the concept of low risk, which occurs in real time in the market of every small business, reducing the risk of side effects leading to risk. It is also believed that small movements are easier than large movements, and that small movements occur more frequently than large movements. Scalp trading with stochastics. It can be difficult to predict the price of crypto assets because they are often unpredictable. However, some patterns give you insight into current market conditions and may allow you to diversify without extreme levels of risk. The chart pattern in question looks like a classic head and shoulders pattern. The downside, however, is that it removes much of the conviction of the patterns when they are in the center as long as important levels can be seen. When prices move in cycles that are short in duration, you can expect to see short-term gaps and/or retracements. It's important to interpret the price action along with identifying potential entry points, as it highlights your overall view of the cycle. You are looking for a setup. The price had recently been rallying, but it saw resistance at the 50-day EMA before sharply declining and turning back up to new support. After breaking out over a 2-month trend line, price pulled back sharply before resuming its rally. A bullish crossover triggered at the midpoint of the chart and rally. The subsequent reversal found support at 50-day EMA. Since then, it has been in a bullish trend with no losses. Scalping can be done using the stochastic oscillator. The probability period affects the importance of the current price in proportion to the size of the last period. An attempt was made to roll back the price of a security by comparing it to its last price. The purpose of scalping with oscillators is to gain momentum in a popular market, a move that moves up or down in parallel. Prices appear to be closing near the end of their most recent high before reversing. Examples of these are below. Combining 5, 8, or 13 moving averages with a SMA is smart because it helps you understand what the market is really doing. Combining these 3 types of bars offers familiarity to long-time traders, and they've stood the test of time, something that requires a lot of skill when trying to interpret them. It's a visual process, examining relative relationships between moving averages and price, as well as moving average slopes that reflect subtle shifts in short-term momentum. A sudden change in momentum like this can be an opportunity to buy or offer a short sale. If you have multiple time frames on which to see the decrease, bearish moving averages crossing over and forming sell walls are a good indication that there's opportunity for a quick profit. Instead of trying to anticipate and jump into the market when it is already trending, AI trading can analyze patterns to tell you if your competitor or group of competitors are making a move and what markets they are focusing on. This gives those willing enough to take the time a competitive edge by taking the other side of that market's trade. What you need to know before scalping. Scalping requires a trader to have iron discipline, but it is also very demanding in terms of time. While longer-term time frames and smaller sizes allow traders to step away from their platforms, since possible entries are fewer and can be monitored from a distance, scalping demands a trader's full attention. Possible entry points can appear and disappear very quickly, and thus, a trader must remain tied to his platform. For individuals with day jobs and other activities, scalping is not necessarily an ideal strategy. Instead, longer-term trades with bigger profit targets are more suited. Scalping is a difficult strategy to execute successfully. One of the primary reasons is that it requires many trades over the course of time. Research on this subject tends to show that more frequent traders merely lose money more quickly and have a negative equity curve. Instead, most traders would find more success and reduce their time commitments to trading and even cut down on stress by looking for long-term trades and avoid scalping strategies. Scalping requires quick responses to market movements and an ability to forego a trade if the exact moment is missed. Chasing trades, along with a lack of stop-loss discipline, are the key reasons that scalpers are often unsuccessful. The idea of only being in the market for a short period of time sounds attractive, but the chances of being stopped out on a sudden move that quickly reverses is high. Trading is an activity that rewards patience and discipline. While those successful in scalping do demonstrate these qualities, they are a small number. Most traders are better off with a longer-term view, smaller position sizes, and a less frenetic pace of activity. How to use the parabolic SAR indicator. Calculations show that the more a trend moves in one direction, the faster the SAR will accelerate to catch up. This is useful in that the indicator gives room for the price to go up or down, but the more the price moves in one direction, the more likely the price will reverse, so there is less room for the indicator to give. If prices fall below the SAR, the movement may complete or at least enter a temporary pullback phase. The parabolic SAR can be used in many strategic ways and can be applied in all financial markets. Its main functions are finding a buy point when the price moves above the dotted line and the point moves below it. Look for a sell or short point when the price moves below the dotted line and the point moves up, with trailing stop loss. Parabolic SAR continues to trade until a signal is generated in the opposite direction. Shows if the price has recently risen or declined, and when a reversal may occur. Along with other rules, and analyzes, a parabolic SAR can be part of a strong trading strategy. Parabolic SAR breakout. Parabolic SAR is an indicator that provides a continuous breakout. Whenever the parabolic SAR moves to the opposite side of the price, it can be viewed as a trend reversal or trend break. Therefore, one of the simplest breakout strategies is to retreat in the direction of the trend and wait for a parabolic SAR trading signal. For example, let's say the trend is rising and the overall price is rising. If the parabolic SAR rolls above the price, it now means that it has moved down and entered a downtrend. To avoid losses, you may consider placing a stop-loss order below the swing low formed before the entry signal. Here is an example using the Apple stock chart. The price has started going up, and the green boxes mark the start and end of each trade, and thus profitability that occurred during the uptrend. There is a trade going on right now, but it has already made a small profit because the trade is halted when it falls below the indicator. A purchase occurs when the price drops by more than a point in the overall uptrend. What does scalping mean in Forex? Scalping in Forex is a form of trading characterized by short-term profits and minute price movements. It can use leverage to make it more difficult for the market to fluctuate against you. The best Forex scalping strategies involve leverage trading. Forex leverage is an investment technique that allows traders to borrow money from a broker and have more exposure to the FX market, only using a small percentage of your full asset value. It provides traders with the potential to make bigger trades while paying less in commissions. This strategy can be used for both winning and losing trades. If a bet is successful, then it will amplify the profits of your overall trading account. However, if a trade goes against you, then you need to make sure that such losses don't ruin your plan and increase the risk of further losses in the future. Applying RSI for scalping. But, before jumping to conclusions, it is important to know the ideal RSI setup for day trading. Most traders prefer the standard 14-period RSI value because it causes less noise in the market. RSI analyzes data from previous trading sessions to determine if an asset is overbought or oversold. When the duration of the RSI is shortened, the indicator has less data to draw conclusions from. Therefore, the chart becomes more sensitive as the time period gets shorter. Increasing the time frame for RSI, on the other hand, increases the amount of data that is included in the RSI's calculation. As a result, the data becomes less responsive, and there are less signals on which to make your strategy. Day traders typically use periods between 9 and 14. So, These are the ideal settings for RSI day trading strategies. RSI divergences. Divergence is a common method for identifying possible trading opportunities. RSI divergence occurs when the RSI begins to reverse before the price. A bullish divergence occurs when the RSI produces an oversold reading, followed by a major decline corresponding to relatively lower price lows. This means that bullish momentum is developing, and a rally above the oversold zone could signal the start of a long position. Conversely, a bearish divergence occurs when the RSI creates an overbought reading, followed by a lower high that corresponds to the corresponding highs of the price. As you can see in the chart below, a bullish divergence was identified when the RSI formed higher lows while the price formed lower lows. Forex price action scalping. Price action trading is a technique that doesn't require an indicator. Forex traders focus on price only, rather than indicators, since they are not as important. This is observed through candlestick charts, using support and amp resistance levels, and trend lines to decipher the same information they would extract from a technical indicator. By conducting an in-depth analysis on the price of a security, traders can then make an informed decision based on trend continuations, and amp will only scalp a trade if the target has the appropriate risk-reward ratio. Most Forex price action traders use a technical approach and ignore fundamental analysis. They do not take into account external factors, like news or geopolitical events that could affect the currency market. Some of the factors that impact the price of foreign currencies include inflation, economic growth, supply and demand, trade status, interest rates, and account balance. Forex scalping signals. Our instruments vary so much that they must be generated by software or by technical indicators. We have multiple types, including Forex signals, which offer faster transactions. The Forex market is a popular trading market that people and organizations can trade different stocks, currencies, or commodities. It is volatile in nature. The market fluctuations fluctuate significantly throughout the day. Short-term signal providers target a number of pips to help scalpers spot potential opportunities when the market shifts in their favor. For example, as it gets more crowded or less busy. Forex scalping signals are based on economic events, such as the ones we have discussed above. These types of signals include Forex scalping indicators like the economic calendar forecast and previous price action. Most traders use a Forex scalping system that provides full access to charts, pips, and Forex technical indicators, with access to trading hours from major cities around the world. Technical analysts especially need to be completely focused on studying price charts and looking for opportunities during the busiest hours of the day. As you might have guessed, scalping is a form of trading that requires a trader to buy and sell stocks in quick succession, with the intent of making small profits on many trades. The goal is to make many small profits instead of risking a larger sum on one trade. Should you try scalping Forex? The conclusion is that scalping is a risky business, and it is not for everyone. It requires a lot of hard work, patience, discipline, and a little bit of luck. Scalping Forex requires you to have an understanding of the market, the trading system, and how to use technical analysis. The conclusion is that scalping is not for everyone. It requires a lot of hard work, patience, discipline, and a little bit of luck. Scalping Forex requires you to have an understanding of the market, the trading system, and how to use technical analysis. What are the best timeframes for Forex scalping? Forex scalping is a trading style that involves the trader holding a position for a very short period of time, usually between 5 and 15 minutes. The best time frame for Forex scalping is the 5-minute chart. It is not only the most popular time frame among traders, but it also provides the perfect balance of volatility and liquidity. What is cryptocurrency trading scalping? Scalping is a low-risk trading strategy that requires small and frequent profits. Scalpers often closely monitor the prices of certain assets and take advantage of fluctuations. The volatility of the cryptocurrency market has made scalping a very popular type of cryptocurrency transaction. Which cryptocurrency is best for scalping? Your trading style and risk profile will determine which cryptocurrency is best for scalping. Beginners usually choose Bitcoin over other altcoins because they are less volatile and more stable. Trading can be automated using various Bitcoin or EA scalping indicators or bots. What risk should I take when scalping? Nobody wants to lose even 1% of their account balance on a single trading idea, but it's also a good idea to review your maximum exposure to your total account balance. As per the 5% rule, you must not take more than 5% of your total account balance on any trade. If you are losing more than 5% in a day, it is best to stop and resume trading when the market is in your favor. Is scalping better than day trading? Scalpers can handle stress, make quick decisions, and act accordingly. The trading style that works best for you depends on your time zone. The average scalper trades hundreds a day and stays with the market, while swing traders reduce the frequency of trades and check-ins. What is the most profitable, scalping or swing trading? Swing traders make fewer but riskier trades and make bigger profits. Scalp trading requires more action and the notion that it is easier and safer to make a small profit than a big one. Scalpers make less profit from each transaction but make more transactions to compensate.
Please like, subscribe, and hit that bell button for more videos.